Welcome Manoj Viswanathan, MD and CEO of HomeFirst Finance, to talk about their results and road ahead. Thank you very much, Mr. Viswanathan, for your time this afternoon. I can see very good, healthy growth this quarter. And plus, I understand that this growth, or in the guidance for going forward, it appears that your momentum is so strong that you are likely to beat your guidance as well. Where is this coming from, such good growth out of the 13 states you're operating in? Where are you witnessing maximum amount of traction?
Actually, sir, the growth is across the board. We are seeing affordable housing demand quite strong across all the states. We see the latest figures that we have from the Bureau, which is for quarter 3 of last year. Quarter 3 over quarter 2, the growth has been about, quarter 3 year on year, growth has been about 13% in affordable housing segment. So that momentum is carrying through, and we are seeing that on the ground as well. We are also expanding our network in these states, in the 13 states that we are present. So a combination of good demand on the ground plus our network expansion is giving us. So we are at about 35% year-on-year disbursal growth, and that is leading to the strong AUM growth as well.
AUM growth is strong. You're expecting it to sustain above 30%. But what about NIMs as well? Because on a sequential basis, we already saw an improvement. But for a full year basis, what kind of numbers you're expecting?
NIMs should stabilize or improve from these levels. We are at 6.1, and now that the inflation is moderating and interest rates are also likely to moderate going forward, we should be able to comfortably maintain the 6.1 or even show a slight improvement on that.
To talk about that slight improvement part, because one were to listen to all these economists who are saying that the first half of next calendar is when the rate trajectory may turn in India and start gradually coming down. If when that happens, and your growth continues at this pace, how does that coincide in terms of NIM expansion? How much exactly is the kind of relationship of cost of borrowing going down, growth continuing? How does your NIMs expand with that?
Our guidance would be that we should be able to maintain these NIMs, and like I said, probably very marginal improvement, because we run a floating rate book, and if the rates moderate, if the interest rates moderate, and then ideally, as a fair practice, we should be passing on the rates to our customers, and we intend to do that. Because while the rates went up, we passed on the increase to the customer. So while the rates go down, we intend to pass it back to the customers. So NIMs, 6.1 or thereabouts is what we are likely to maintain.
Just a quick hygiene question there. What's the contribution or split of floating rate book versus the other? And in terms of the move going forward, what are you expecting with respect to asset quality? Because there was a slight deterioration.
So we run a fully floating rate book. So whatever rate gets passed on to us, we are able to pass it on to customers. And asset quality has now stabilized at pre-COVID levels. And throughout last 2 years, if you see, there was continuous improvement quarter on quarter, because we were kind of recovering from COVID, and we were showing an improvement quarter on quarter. But now that it has come back to pre-COVID levels, there would be minor fluctuations from quarter to quarter, and that's all there is to read into that.
Mm-hmm. Manoj, I was just seeing that your ROEs have actually crossed 15% this quarter.
Yes.
Where do they trend from here on?
So 15% is a big milestone for us as far as ROEs are concerned. So the company is crossing that for the first time, and the overall at all aspects, the company is doing well. So we are looking at maybe up 75 basis points to 1% improvement in ROEs every 12 to 18 months.
Okay, Manoj, on that note, we let you go. Appreciate you joining us on the show.